All right, earnings season kicks into high gear next week with Citi, IBM, and others reporting, and so far results have been mixed. So what should investors be looking out for in those reports? Let's gather our Power Lunch Market Insiders and talk about that with Darren Richards, Chief Investment Officer at AKT Wealth Advisors, and Jessica Hoverson, she's Fixed Income Futures Analyst at MF Global. Welcome to both of you.
Hi, Sue.
Darren, I'm going to start with you because in the past, even though earnings were not that good, people were willing to buy some of these stocks. You know, the dash for trash is the way that you characterized it. Has that changed? And if we start to see quality earnings, are the higher quality stocks going to be what investors seek out next week?
I definitely think the higher quality stocks are poised for a rebound. We saw last year when the market rallied between March and the end of November that was really the lower quality stocks that rebounded the strongest. And if you look at 2010 earnings expectations, it looks like the larger, healthier companies are going to grow faster than the smaller, heavier debt, lower dividend paying companies. So I think you're really going to see a resurgence for the blue chip names.
Also, Darren, before we turn to Jessica, you have been very aggressive in some of the emerging markets. But since we last talked to you, we've seen those markets continue to extend themselves. Is that still a viable play?
I think it is. It's certainly, you know, they're getting a little frothier than they were several quarters ago. But again, it all comes down to earnings. If you look at earnings expectations, it's over 2.5 times the earnings growth in the emerging markets over the next several years compared to the developed markets. So even though there are some questions and concerns about valuation, I think maybe that would indicate that maybe you want to buy on some dips. But I think that's a long-term hold for people. And you're going to see a real sea change, that emerging markets are going to become a larger percentage of people's portfolio overall.
Okay, Jessica, you know, we seem to be doing pretty well, and then economic data started to disappoint a little bit. Do you look for more disappointments coming up earnings-wise?
Well, I think actually if you just look at the broader market right now, there are greater macro risks that have been uncovered by the events of this week. And that does dampen the outlook for, I would say, economic recovery, but improve the outlook for the Treasury market. So if we look at those risks, I think some of them that have been uncovered, first off, that policy normalization is going to be arduous and divergent. Secondly, that the policy from Washington is anti-growth, and it does dampen the outlook for the recovery. Thirdly, I think that if you look at what's going on with Google in China, it underscores that protectionism and international tensions are increasing, and trade is the lifeblood of the global economy. And if that continues to be compromised, that does compromise the outlook for the global recovery. And finally, the economic data. I think expectations for going into 2010 were very high. I think so far we've been disappointed. And I think that also the global recovery is very uneven. If we look at what's going on in the U.S. employment sector versus what we saw in the Australian employment data, we see that there is most definitely a divergent recovery, and those factors do play into the Treasury market.
That was quite a compendious answer there, Jessica. So much so I'm afraid we got to wrap. Thanks for being with us, Darren and Jessica.